All right, gold, it's shiny. It's been valuable for like, what, centuries? And lately it's been all over the news as this hot investment. Prices are way higher than last year, and it seems like everyone's suddenly an expert, piling into it. But before we all go out and trade our retirement funds for a stack of gold bars, maybe we should take a closer look, huh? See if gold's really the golden ticket everyone's making it out to be. You always hear people saying gold is a safe haven. Like, it's the asset to have when things get a bit shaky, right? Geopolitical stuff, economic worries, whatever it is, gold's supposed to hold its value when everything else is crashing down. And to be fair, if you look back through history, it kind of makes sense. I mean, gold had been a way to store value for ages, a thing you could actually hold that people could count on. But here's the thing that's always tripped me up a bit. Bonds have actually done better than gold during those big crises, like when the financial world went haywire back in 2008. When things get truly scary, people actually want stability and predictable returns, wouldn't you say? And that's where bonds come in. They offer a fixed rate of return, so they're generally seen as less risky than stocks. So maybe this whole gold as the ultimate safe haven idea needs a little bit more context. And what about gold as an inflation hedge? I feel like that's the other big one you always hear, right? Well, that one's a bit more complicated, to be honest. It's true, gold has usually been seen as a way to protect your money when inflation gets out of control. But when you really look at the data, it's not a perfect match at all. Sometimes gold prices go up along with inflation, sometimes they don't. Like back in the 70s, inflation was a huge problem and gold prices went through the roof. But more recently, when inflation's been pretty low, gold hasn't really kept up. So if someone's thinking about going all in on gold just to protect against inflation, they might want to think twice. You know, it's not a sure thing, and the way gold and inflation interact can be pretty unpredictable. And we can't forget about the big players, the central banks, and what they're doing with gold. Remember those sanctions they slapped on Russia back in 2022? Well, that whole thing had this ripple effect across global finance. One of the things that happened was some central banks, especially in China, started shifting their reserves. They wanted to get away from holding so many US dollars and put more into, you guessed it, gold. Part of the reason was they wanted to protect themselves if things got worse between countries, if those geopolitical tensions kept ratcheting up. And there's no doubt that this extra demand from central banks has helped push gold prices higher. But here's the thing, and this is something I always try to keep in mind. Just because something's price is going up doesn't mean it's a guaranteed win, right? If you're buying into gold when it's already at a peak, are you really going to make money from it? It feels like more of a gamble than anything else. Okay, but what about those gold mining companies? Instead of just betting on the price of gold itself, what if you invest in the companies that actually dig it out of the ground? It's an interesting idea, right? Like maybe there's more potential for growth there, especially if the demand for gold keeps going up. But you got to remember, mining is a messy business. There's a lot to think about, like how much it costs to run those mines, the political risks in those countries where they're operating, and then the environmental impact of all that digging. It's definitely not as easy as just buying a gold bar and stashing it under your mattress, haha. And while we're talking about spreading the risk, what about commodities in general? Things like oil and gas, agriculture, basic metals like copper, and obviously precious metals like our friend gold. So instead of putting everything on gold, maybe a wider range of commodities would make more sense. At least you'd be spreading the risk a bit, and you might benefit if different sectors do well. Just think about it. If the global economy is doing great, there's usually more demand for all kinds of commodities, from oil to corn to copper. And if inflation is a real worry, commodities could be a way to hedge against that because their prices often go up along with the cost of, well, everything else. But here's the catch, and it's a big one. Commodity markets are known for being volatile. They can swing up and down like crazy, and all sorts of things can affect them.
Well, gold can be a tempting investment, especially when things feel uncertain, and everyone's talking about how much its price is going up. But it's super important to remember that gold isn't some magic solution. Just like with any investment, there are risks and potential rewards, and you need to understand both sides of the equation. So the real lesson here, I think, is don't let the hype around gold get to you. Don't get swept up in it. Before you jump in head first, take a moment and really ask yourself some serious questions. What are you actually trying to achieve with your investments? Are you looking for a quick win, or are you in it for the long haul, trying to build something stable?
Honest with yourself, how much risk are you comfortable with? Can you handle it if the gold market takes a dive? And maybe the most important question of all is this: does gold actually make sense in your overall plan for your money? Does it fit in with everything else you're doing? If you've really thought it through and you decide, yeah, a little bit of gold would be a addition to my portfolio, Just remember this one golden rule. Haha, no pun intended. Don't put in more than you can afford to lose. It's good advice for anything you invest in, but it's especially true for something like gold, which can be pretty volatile, as we've talked about. And hey, instead of going all in on physical gold, which comes with its own headaches, like where do you even keep it safe and how much will insurance cost, maybe think about a gold ETF. It's a lot easier to buy and sell, and you don't have to worry about storing it in your basement. Haha. Or if you're feeling really adventurous, you could explore those gold mining companies we touched on earlier. Just remember, it's a whole other world with its own set of risks.
Place in the diversified portfolio, but it's not some magic solution to all your financial problems. It takes careful planning, a real understanding of what you're trying to achieve, and a good dose of caution. So yeah, before you chase those golden dreams, do your homework, make sure you're making smart choices that match your goals. Happy investing, everyone.